Happy Sunday, everyone. Brad Hesselberg with the Market Forge back again for another Sunday video. One of the things that I want to start diving into is common investor mistakes. Now, there's dozens of them. I think the main one that I want to touch on today, and because it's incredibly relevant with what we just had last week, is essentially chasing narratives and buying parabolas. And we'll get into what that means specifically, but we're basically going to talk about ways to avoid getting wrecked. So before we kick off, just to be clear, this is not financial advice. I am, in fact, a financial advisor. And if you're looking for advice, I have a link in the description below. Feel free to take a look at that. But this is not financial advice. But with that said, look, this week I watched a ton of very smart investors do something that almost guarantees poor returns. They bought gold and silver during the biggest move of the year. And they didn't do it because they're unintelligent or because they're dumb. They did it because they're human. And this is a mistake that shows up every market, every cycle, over and over again. So here's the mistake, okay? And you can see it repeated. I've made the mistake. We've all made the mistake. What needs to happen is that once you understand the mistake, you don't make it anymore. But you see this happen time and time again because of human emotion. We need to learn to maintain our emotions when it comes to investing. But here's what you see. An asset moves quietly for months and no one cares. It's boring, and then boom, it goes vertical. And then suddenly, the news, Twitter, YouTube, everyone has a million reasons why it's going to keep going higher. People feel late, they feel like they're missing it, so they buy right into the parabola. The story does not cause the move. The move creates the story. Okay, when you start seeing it talked about regularly on Twitter, when you start seeing it all over the news media and television, that's when you know that the move is probably near its peak. And if you think about it from this perspective, let's look at MSNBC. And I'm not blaming anybody, but I just want to point something out, something to think about. Okay, you have forces working against you. If you believe that or not, that's up to you. But I believe that. Think about this. Who are the ones that spend the dollars, advertising dollars on MSNBC? It's a lot of large investment firms. How do they make money? They buy the bottom and they sell the top. It's funny how year after year, cycle after cycle, you start seeing the big assets constantly talked about on the television. Now, just let me ask you a question. Do you think MSNBC is committed to you? Or do you think they're committed to the advertisers that keep them paid? I think the answer is pretty simple to understand. So keep that in mind. When they start blasting this stuff all over television and volumes start aggressively picking up, they're dumping their position onto the FOMO chasers, which is typically retail. Let's take a look at gold and silver this week. And I don't always look at charts when I do my Sunday conversation, but I do this because it's incredibly relevant. So we're going to look at the gold chart, and this is the weekly. So this is like a very long-term time frame, right? Seriously, like this goes back to, we'll go back even further. But let me just point out something to you, okay? And this is why gold and silver is tough if you're buying the parabola, if you're buying the top. Now, there's no way for me to know if this is the long-term top, if this is a local top. But what I can tell you is that you still don't want to be buying up here. Look how this consolidated. This is what you call consolidation or accumulation. Why do you think they call it accumulation? Because that's where smart money is buying. That's when they're loading up their positions, getting ready for this move. Okay, this was flat, basically flat from April 2025 until August 2025. That's several months of sideways price action. Do you think anybody cared about it then? Nope. They care about it when it starts doing this. Okay? You want to be buying here not necessarily here. Like this probably would have been an okay spot to get in. This is not. This is an enormous candle. You had in 1 week, you had a 20% move. Okay, that's emotions. Like people want that. They feel like they missed out and they want to get into it. And then guess what? You end up here. This is how we end up in the buy high, sell low situation. Because what's going to happen? Realistically, what's going to happen? Okay, let's say you bought gold at 5,500. Okay, it sucks. You don't want to be in that spot. If this continues, you'll say, well, you know what? This is an investment buy. Then I'm just going to be a bag holder. I'm going to hold on to this thing. Fine. You still going to do that if it gets back down to 3,400, or are you going to go, ugh, I need to sell this. I can't hold on to this. I'm down big. I got to get out of my position. And that's probably when it will start going up again, to be honest. Like you see it over and over again. Like I said, I've made the mistake. And we still all make the mistake, but it's important to understand how this works. Okay. This is not where professionals buy. This is where professionals sell into emotional buyers. And with gold can trade sideways for decades. Look at this. This is 2020. It basically traded sideways until it broke out in 2024. That's basically 4 years. If you bought up here, you might be waiting 4 years to break even or see a profit. Can you do that? Most investors can't. Okay. Silver, same story. This is the absolute definition of a parabola. This is unreal. When you see it going up 25% in 1 week, and keep in mind how large of an asset silver and gold are. They're massive. The volume it takes to get that sort of price action is incredible. Don't want to be in that. Okay. Like if you'd gotten down here, that's fine. But look at silver. It traded it's the same situation. It traded sideways from August 2020 to basically May 2024. That's almost 4 years. Nobody wants to do that. This is an enormous accumulation phase because it's a massive asset. Okay? We want to avoid doing this. Look, traditionally, investors don't buy value, they buy confirmation. They get confirmation from the news, they get confirmation from Twitter, they get confirmation from their friends and family who are like, oh, you got to get in, you got to go in, it's going to keep going higher. And then you'll notice that there's stories that come out that confirm why it needs to go higher. Okay. And those stories might be correct, but we have to understand price action on top of fundamentals. It's very key. Investors don't buy value, they buy confirmation. They wait for price to prove the story to them. But by the time the price proves the story, the risk reward is terrible. It's terrible. If you're buying up here, you have a better chance of taking a loss than making a gain. You want to buy during accumulation. Be able to identify these things. Do what professionals do. Okay. You buy narratives when they're boring. You sell narratives when they get exciting. As soon as it starts getting plastered all over the news, it's probably time to get out. Metals were boring for months, even years. Nobody cared. You had your gold bugs. They were screaming from the top of the mountain, and no one listened to them. They're listening to them now because it's all over the news and because FOMO has kicked in. And the pattern happens everywhere. Bitcoin's a really good example. Bitcoin, let's see, what was it, 2022? If my chart will stop freezing. Oh, come on. Looking at the weekly. Okay, so here we are. 2022, FTX crash, crypto's dead, nobody wants to touch it. I'll tell you one thing. I'm willing to bet that there were people up here at 68,000, the high in November 2021, that said, I'll just wait for it to go down a little bit. It got down to 17, 16,000. Crypto's dead. See how that works? Isn't that funny how that works? It's literally a meme. Like you've seen the meme. You're buying at 15,000, you feel reckless. FTX collapses, crypto's dead, regulatory fears, and nobody wanted it. The people that were buying at 15, do you think they were happy when it got to 70,000? Even when the ETF started coming out, you still had people thinking, it's not going anywhere. But you know who was buying? Institutions were buying. Institutions were loading their bags around this time. Where do you think they were selling? Around 129, 128? 100%. 100%. And the narratives were, we've got more power behind this. We're going, longer business cycle, expanded business cycle, all the reasons why it should continue to go up, and then it started going down. Put yourself in the position of a large investor. Hey, whenever you're looking at this stuff, if it's gone up a couple 100%, do you think that they're looking to get out, or are they going to keep holding through more volatility when there's more risk now to the downside than there is to the upside? Hey, it's all about logic and understanding your position. The risk reward is better when it's scariest, and it's higher, or it's lower when it feels safest. Okay, you have to understand the inverse if you really want to make money when it comes to investing. We can look at Nvidia too. Nvidia in, oh my goodness, October 2022. Nvidia is dead. Nobody needs chips. We're in a bear market. Get out of tech. Get into value. Get into defensive positions. 2022 was October 2022 was the bottom. I bet if we went back around this time, it was probably the scariest to buy into Nvidia. Now everybody wishes they had bought into it. And this thing pumped significantly before investors started getting out of it. And I mean, they're still in it, right? But looks like we're accumulating, maybe consolidating. We'll see. Markets looking a little nutty these last few days, but we'll see where that goes. But nonetheless, everybody wishes they had bought down here, but they didn't because of emotions, not logic. You can go back and look at this logically and say, oh man, like what a great buy. But if you checked your emotions at that time, you know why you didn't. It's emotional, not logical. So yeah, just get to the point. Look, the big lesson, investors don't lose money because they don't know what to buy. Usually investors do know what to buy. They do the due diligence. They understand what they're getting into. They lose money because they buy it at the wrong emotional moment. You have to learn in investing. It's not always about fundamentals and technicals. Emotions have a great deal to do with this. And if you can't learn to manage your emotions, you will struggle to be a great investor. And that's just the truth of it. Look, if you feel FOMO, that's not a buy signal. That is a warning. If you found this valuable, please like and subscribe. It helps us get our algorithm out there and get more investors able to see our content. Yeah, I'll just leave it at that. Thanks for coming, and enjoy the rest of your day.